You can be a very introverted person and end up quite extroverted later in life. You can be very disorganized and become organized.
Yeah.
So it can change for sure.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders podcast.
We're back with part 2. Darren's going to talk about the importance of pain in your trading in part 2. We also talk about the lesson of the 43 million trades and what this means for your trading. We'll get into the big 5 and why neurotic traders have an advantage over other traders in the markets. And you'll see why traders diversify. Darren talks about this in today's session. And you'll get one of the easiest ways to have an edge in your trading. All of this and more in this episode of the Two Traders podcast. Yeah, and relating it to the idea, the Mario Andretti quote, which was, if everything's under control, you're not going fast enough, right? So how do you think that relates to what you just said, like in terms of your approach as a trader or a fund manager? Like, should we be pushing the limits? Because I've noticed that when you get, you push it to the edge where you're a little bit uncomfortable, that's when the most growth happens. But is that what we should be doing as traders? Like these fund managers, should they really be looking at a different approach?
I think we should, but at the same time, you just need to still have some control over your risk. So you want to be pushing it. You want to be allowed to have some drawdowns. You want to have some pain in there because that's where the rewards are going to be found. But at the same time, you don't want to be able to blow up your account, and it's quite a tricky little balancing act, isn't it? If you've got 200 million to trade with, then okay, making 3% a year is probably fine. But if you're trading smaller accounts and you want to make a decent return, then you do have to kind of push it. And that feeling of comfort, I think, generally means that you're not taking much risk at all. So if you are feeling completely comfortable with everything, then you've got to expect lower returns. And I think on a kind of deeper level as well, you can fall in the trap of, say, taking exits or a money management strategy that just feels really easy. That invariably means that you might be blunting any edge that you have.
Yeah, that's right. Yeah,
I mean, it's amazing how little distance a trade has to travel before it feels like it's a good time to get out.
Yeah, no, and it's like that study that you posted in the Naked Forex Now forum, where about the 43 million trades that the broker had looked at, and that's exactly how. That's exactly how most retail Forex traders trade. They take fairly quick profits and they let their losers run just far enough to ensure that they're not profitable.
Yeah. And I think that what most of them are looking for, they're not looking necessarily at probabilities. They're looking at what feels easy to me, what feels comfortable to me. And 70% win rate 1-to-1 sounds and feels really comfortable, and a lot of people go up after that, and certainly some people make really good returns doing that, but it's not necessarily easy to maintain over a long period of time.
Yeah, it's true, but it feels good. So as you ratchet down that win rate and increase your reward to risk ratio, it gets more and more uncomfortable for the average trader, I think. So I wonder, Darren, if you think that there might be something related to personality in this. So depending on how, like, for example, in psychology, there's the big 5, right? Which is the 5 personality dimensions or whatever. And whether or not you agree with it, the basic idea here is that most people fall on a continuum between being very open to new experiences or being really cautious. The second dimension is conscientiousness. So they're very, very organized or they're completely careless. The third one is extroversion. So they're outgoing and energetic, or they're really quite reserved and introverted. The fourth one is agreeableness. So are they friendly and compassionate, or are they challenging and detached? Now, that's the one that I believe would be related to whether or not you would be more or less likely to embrace a trading strategy that had a lower win rate. You know what I mean? I think that people who might be lower on agreeableness, so they're sort of detached and dispassionate, they might be the type of trader that might be better suited for that. I don't know. The last dimension I'll just note here just to round it out is neuroticism, which is and this also might be the dimension. I could be wrong. It might be more neuroticism, which is on one side, you've got people who are very nervous and sensitive. And on the other end, you have people who are secure and confident. So maybe it is those people that are low in neuroticism and very confident that would be more likely to embrace the low win rate, high reward to risk ratio trading strategy. What are your thoughts?
Well, I feel slightly out of my depth. The thing that instantly jumps to mind here are those traits fixed? Are they fixed traits that people have?
No, they used to think so. No, they used to say that personality was fixed, but now it's pretty clear that it's not.
Yeah, so I think all of those things can affect your trading. But for me, the interesting thing would be if you can learn to become better at the traits that help you.
Right. See, to me, like, it could go either way. If you're low on neuroticism, which means you're very secure and confident, and you're not very nervous and sensitive, right? So if you're not sensitive and you're very confident, that could be the type of trader like Michael Burry who takes a position and says, I don't care what anyone says. He could be low in agreeableness too. He doesn't want to, not the type of person that would necessarily agree with everything you say. And so that might be the type of trader who's best suited to the sitting through the drawdowns and coming out the other side and able to take a strategy that doesn't win very often and just keep riding it. But I could be wrong, but that's just kind of my first thought here is that, if we were to look at something and say, well, maybe it's this, maybe that's what we're looking at here. But it's a fair point. These things change over time. You can be a very introverted person and end up quite extroverted later in life. You can be very disorganized and become organized.
Yeah.
So it can change for sure.
Yeah, I know. I mean, I know you love to test me on these things, and I always feel slightly out of my depth when talking about them. But I think one of the dangers with looking at your personality and then building your trading strategy on it is I wonder how good we are at judging our own personality, because generally if you ask someone if they're in the top 5, if you ask a load of people if they're in the top 5%, then they're all going to say they're in the top 5%. So if you ask someone whether they're a introvert or extrovert, are they being honest with whether they really are an introvert or not? Do you see what I mean?
Yeah.
You kind of need somebody else to kind of evaluate your personality, really, don't you? And,
yeah, exactly.
Or you need some sort of test for it.
Yeah. I'll put a link in for the show notes so you guys can take the Big 5 test if you're just curious to see. So you guys can do that online. But yeah, I agree. You're right. It's definitely the case where, like you say, you ask a room of people, how many of you are above average intelligence, and 85% of the room says they're above, when really we know it's probably about half, right? Yeah, it's funny. So when we're talking about, have you made it? Do you think that just the act of saying, you know what, I think I've made it, does that mean that already you're in trouble?
I don't know, because you kind of have to have the feeling that you have made it, or at least you're on the road to making it, because you need some sort of self-confidence to trade anyway. I mean, if you think that you haven't got it at all, then why are you still putting your money on the line every day? It's a difficult one to gauge, really. And I suppose you can if you just journal your results and see how you're doing, if you're improving, then I suppose that's the clearest way of telling if you're on the way to making it.
Yeah, I mean, it's one of those things, like, the only reason I mention that is sometimes people think, oh, well, I'm just going to, things are going really well now, so there's bound to be a reversion to the mean or whatever, things are going to turn around soon. And I think we've spoken before about gambling and how it relates to trading. I was listening to the sports gambling podcast the other day, and the two guys that do it were on a real roll. And so the one guy is a professional gambler and the other guy is just an ex-athlete. And so the athlete asked the gambler, the professional gambler, he said, so we're on a real roll the last couple of weeks. Should we pulling back on our positions? Like the gambler's like, no, just roll with it, And so now this week the podcast came out and they were completely slaughtered last week. You know what I mean? Like they totally took a hit. So they sort of reverted back, which I guess is to be expected. But that's what, makes me think about as a trader. It's like one of those things that you feel like, okay, yes, I've got it. And at that moment, I feel like, oh, I wonder if it's really the feeling that you've got it, the feeling that you made it, that might be a red flag. Sort of like, that this trend is never going to end. That's usually like, okay, the trend's going to start fizzling out now.
Yeah, there's a sort of an air of overconfidence in proclaiming that you've got it. And, why do traders diversify? Traders that have got it, why do they diversify? And why do people spread their investments around and invest in property and some savings and some pensions? And why do they do that? I think there is a danger of just then being overconfident, and that's where you realise that you really didn't have it, because you've blown up your account. Yeah. So, it's a difficult balancing act again.
Yeah, exactly.
Yeah, I mean, you've got to be happy with your progress, haven't you? And, for me, I tend to listen now to people who have been around a long time and who've, probably seen it all, much more than, some new trader on a forum who's like all of a sudden doing really well. And I think I just try and align my expectations with, what those traders with real longevity have been through, and I kind of use that as my gauge of whether I'm on the right path to getting it or not.
Yeah, I agree. I think finding, wisdom from those that have been doing it for a long time helps. I'm a big fan of mentors. And the other thing is comparing to yourself. So like you said, like if you have a journal, you can go back and see what was I doing a year ago, 2 years ago, 5 years ago. You can compare your progress not to somebody else, not trying to be as good as someone else or whatever, but you're just looking at yourself and saying, okay, now this is what I used to do, and now I'm doing this. So it's an easy way to bag some wins, especially if you're self-aware and you're pretty good at that. Then it's a great place to, and journaling will help with that for sure. It's a great place to see your progress, and basically it's rewarding to have that progress to be able to point to it. So if I had to say, Darren, as a trader, I've got this trader here, and he's been trading for 2.5 years. He's been making money for the last year and a half consistently, and he feels like he's made it, like he's got it all figured out. He knows his strategy is going to work and that sort of thing. What would your advice be for him? He's fairly new, really. I mean, he hasn't been trading that long, 2.5 years.
Oh God, I hate giving traders advice.
I guess like what were some of the things that you had
for me?
Like what were some of the barriers that you had to overcome, or things that cropped up for you?
I think for me, it was a case of not only understanding probabilities, but then putting them into action.
So how do you put probabilities into action? So you understand, okay, there's a probability of this happening or that happening, but how do you put that into action in terms of trading?
Okay, so, for me, the biggest realization was that one of the easiest ways to add edge was to have a large risk to reward. And then I developed strategies that had a large risk to reward, but then I wouldn't execute them very well. Okay, so when I went through a drawdown period or something, I changed the parameters of the money management or something, and I wouldn't actually execute it. Even though I knew where my edge lied, psychologically I found it hard to execute it. And when you can sync those two up, then you're on the right path. That answer the question then?
Yeah. So basically, yeah. So you realize a couple of things. You realize that your edge came from having a high reward to risk ratio, basically, not anything other than that. Like that was the focus, and that you had to make sure that you were executing, basically.
Yeah.
And I think the reading between the lines, the listeners here can grab something from this, which is what we are drawn to naturally is usually the thing that's going to lose you money. Would you agree with that?
Yeah. And I think that's kind of statistically proven.
Yeah. So not only do you agree, but it's proven. Yes. Okay. Yeah. Yeah. Well, we've got you on one side of the fence on that one. Okay. So cool. Yeah. So yeah, agreed. So what we've seen the 43 million trades that broker had posted up there on that article. I'll post that in the show notes for everyone to read. But the idea here is that if you're doing something because it's comfortable and you think this is what this is what you should be doing as a trader, that's probably the thing that's going to lose you money. And the counter to that, obviously, is that if there is something that feels really uncomfortable, which is, for example, winning 22% of the time, or waiting for a 10-to-1 reward to risk ratio before you cash out that trade, those sorts of things are really uncomfortable for most people. Not everyone, but most people. So what's really comfortable? Well, martingale. That's really comfortable. You got a loser? Okay, double up on the next one. Oh, you get another loser? Okay, double up on that one. And keep doing that until you finally get a winner. That's like the easiest thing to do. Because why? Because you're going to get it all back. If I don't get it back this next trade, I'll get it back the trade after that. As a rule, I think traders, you've got to fight that. You've got to fight the things that make sense, the things that feel good. And when you've made it, you have to be careful because you probably feel like you've gone through all that stuff and to get out to the other side, and now you're making money. Well, now there's going to be new challenges. You're going to be tempted by new systems. You're going to be tempted by your own buying into your own buying your own stock and deciding, okay, I'm so good at this, I should up the risk. You know what I mean? Like all these things now come up. Now that you're on the other side as a trader, it's not just, going through the normal process of becoming profitable, but now on the other side, you've got to deal with all this other stuff. So to sum up, that's basically what we want to, we wanted to get across over these last couple episodes is that to me, when you've made it, or what you define success as, that's going to change. It's going to change over time. It's going to change depending on where you are as a trader. And I think Darren's basically saying the same thing, which is essentially, what's going to happen over time is you're going to realize specific things that you're going to need to pay attention to. And for Darren, it was things like probabilities and becoming self-aware and understanding what you're doing. That's the kind of thing that's probably going to help you out here. And so even though it might seem like you're going to be in this nirvana state as a trader eventually and everything's going to fall into place, that may not necessarily be the case.
Yeah, I agree. When you start out, if you ask a trader starting out, how will you know when you've got it? And you ask the same trader 5 years later, you're probably going to get a very different answer. If you get the same answer, then he probably hasn't got it at all. You learn as you go.
Exactly. New challenges. Cool. Well, thanks so much for your time, Darren. I really appreciate it, and we'll catch you in the next episode.
Thanks, Walter. See you then.